The insights shared in this research represent our observations and are not intended to criticize the United States, its president, or the U.S. currency, nor do they aim to incite fear. While there is widespread enthusiasm surrounding the election of Mr. Donald Trump as President of the United States, it raises the question, has everything on the ground truly changed in just 3 or 4 days? Are the issues between Ukraine and Russia or Israel and Hamas the only major global challenges? Or are there more systemic issues, such as the US $35 trillion debt, still left unaddressed? Will Mr. Trump's presidency effectively resolve this debt challenge? Or is there more to consider regarding what global markets are celebrating? Is the dollar genuinely strengthening, or is this just another instance of market manipulation? Our research suggests that the U.S. national debt of $35 trillion is a critical concern, akin to a ticking time bomb. We believe that the underlying fiscal issues remain unchanged, and that rather than reducing debt, there is likely to be further monetary expansion and accumulation of debt in the foreseeable future. The influx of liquidity into the system has inflated certain asset values, which we believe are at potentially dangerous levels. A miscalculation in the economic landscape could trigger widespread financial instability. In pursuit of Make in America objectives, Mr. Trump's administration may implement tariffs as high as 60% on Chinese imports, and up to 10% on imports from other countries, according to our study. This approach could drive up costs for imported goods from China, potentially resulting in higher inflation, possible interest rate hikes, and even the risk of recession or institutional collapses. As a consequence of heightened tariffs, there may be retaliatory actions from China, potentially in the form of cyber warfare. During Mr. Trump's previous term from 2016 to 2020, trade tensions led to significant economic impacts on China, including the closure of some factories. The current global landscape could see further escalation in this area. While some analysts predict that gold may weaken against the US dollar, we maintain that the dollar's perceived strength is driven by the repatriation of funds from foreign investments in markets like India, Indonesia, and Malaysia, rather than by a robust economic foundation. In our view, the US dollar as a fiat currency is not inherently strengthening on the basis of economic health alone. This research provides a broader perspective on the potential economic impacts and risks facing global markets under these circumstances. Like, share, and subscribe for more such content.